Well, for more on the global markets, I spoke to David Nelson. He's chief strategist for Belpointe Asset Management. I asked him about U.S. President-elect Donald Trump and his impact on Wall Street and the economy.
I think it would be a big positive for the market, and frankly, that's what I'm hoping that we get from Donald Trump in the first 100 days. That he goes after the items he's talked about that have strong bipartisan support. The tax holiday could bring as much as $1 trillion into the United States. A lot of that would go into the government coffers, and that would go a long way to funding some of the infrastructure projects that he's talked about. My biggest concern with that is what will CEOs do with that money? Will they actually put it back into CapEx and R&D, or will they use it to just buy back stock? And that doesn't really translate into the real economy.
And how much will they be looking at the first 100 days of the Trump administration?
I think they'll be looking at it pretty closely. I guess a big question I have as a portfolio manager, how much political capital will he use to roll back President Obama's legacy policies that he put in place? And how much will he actually go after real things that will help the economy? We talked about repatriation. I think that's real good news. I think certainly tax reform is a place that he could really get something done in the economy. But like I've pointed out in past articles, there's a huge economic divide between policy and rhetoric. And how much actually gets done depends on political compromise, because all of this has to get through the House and Senate.
People predicted doom and gloom with Trump coming in. Why has it been status quo?
You're correct. It was interesting that, coming out of the election, it looked like we were headed up for a market crash. Dow futures were down close to 1,000 points. But I think the calming voice from Mr. Trump that night in a well-delivered speech, the following speech by President Obama and, of course, Secretary Clinton helped calm the markets. And I think they realized that a lot of these policies would actually help the economy. I think, given how far the market has actually come in the last several weeks, it's likely we probably pulled forward some of the returns from 2017.
What industries do you expect to see the biggest surge in 2017 in terms of technology, healthcare, or the drug industry?
Well, technology is always important. Pretty difficult to have a bull market without technology doing well. And I'm pretty excited about technology. Some of the advances we're seeing in artificial intelligence, robotics, and certainly Internet of Things. There are some companies out there that could really be home runs in that sector. I guess if I had some concerns, I think some of the concerns I have are really more about the U.S. dollar. If the dollar continues to rise, that's certainly a headwind for large U.S. Multinationals. And you mentioned healthcare. Healthcare is a concern for me as well. Drug companies have been able to raise prices almost verbatim for the last decade or more. And I think what we saw in the last set of conference calls, that a lot of large cap companies like an Amgen with an Enbrel, the ability to continue to raise prices on legacy drugs as volumes fall and competition rises, that game is probably over, and that could be a headwind for the industry.
In regards to China, Donald Trump has not minced words about his relationship with China coming into office. Do you expect there to be a clash over the South China Sea and a trade war with China, or was he just all talk?
Well, you're correct. The rhetoric has been pretty harsh from really both sides. Let me put it this way. I think certainly on trade, Trump wants to reduce the trade deficit with China. But I think a lot of the rhetoric, these are starting points in a negotiation. I think we're going to hear that from China as well. The potential for a military clash in the South China Sea, that's a real concern. And I look around the world, and some of the biggest risks for the markets around the world are geopolitical on almost every side of the planet, every corner of the world. And the South China Seas is certainly high on my list of things to be concerned about for 2017.
The global stocks, David, will certainly be affected by what happened with Brexit. Angela Merkel up for re-election. It's looking iffy as well with problems over the migrants, the refugees. How will we stabilize the global markets with the geopolitics going on around us?
Well, the person who answers that question will get the Nobel Prize. Pretty difficult. I look around the world and I see some tremendous prospects for Europe. Some of the biggest opportunities are there, but also some of the biggest risks. You mentioned Angela Merkel is going to have a very hard election in Germany with the rise of the right. The refugee crisis is tantamount in everybody's mind. Britain will not be the last country in Europe to look to an exit, especially if Brussels can't do something with the influx of refugees. China is key. Look, this is the second largest economy in the world. It's destined to become the largest economy in the world. And some of the issues that China is dealing with are certainly currency, the outflow of capital. President Xi is trying to do a lot to stabilize that. I'm not that concerned because there's $3 trillion in reserves, but the outflow of capital hurts the banking sector, and that certainly weighs on the economy. So I'll be looking at Europe, and I'll certainly be looking at China.